Ladies and gentlemen, welcome back to another video. I'm your host, TheDividendAristocrat, and in today's video, we're going to be covering my dividend income for the month of February. Now, if you guys do enjoy this type of content and appreciate the transparency, consider subscribing to the channel. I'm on my way to 2K and I would really appreciate it. As a reminder, this is not financial advice and I'm just merely sharing my opinions on this channel. Now, with that being said, let's start by taking a look at my portfolio dashboard. So in total, I've invested $40,456 into my portfolio and the portfolio value is currently sitting at $53,520. That gives me an unrealized gain of $13,064 or a total return of 32.29%. In total, I've earned $1,491 from dividends and I've reinvested those back into the positions that paid them out. Going forward, I am projected to earn $837 per year, and by the end of the year, I'm hoping that my yearly projected income will be $1,000 per year going forward. My portfolio yield currently sits at 1.56%, which is a bit on the lower end, but that's how I prefer because I'm focused on total return. My yield on cost is a little bit higher than that at 2.07%, and that's because my stock appreciation has outpaced my dividend increases. Now, the market has been a pretty bumpy ride recently, especially for my portfolio, so it's been a little bit wild, and we can see here that on the past day's change, I was up 1.18% or $622. My cash position currently sits at about $7,800, give or take, and I have 23 total holdings, which I'm trying to cut down going forward. Now, if we take a look down here, we can see how much I've invested and how much dividends I've received each year since I started this portfolio. So in 2020, I invested $2,800 across the entire year, and fast forward to now, 2025, I've already invested $5,000 and we're just in March. This year, I plan to invest at least $12,000 into the portfolio. That was my goal for 2024, but we didn't quite hit it, as you can see right here. But in terms of dividend income, we can see I earned $12.45 in 2020, $76 in 2021, $191 in 2022, $459 in 2023, $729 in 2024, and we're already at $53 for 2025. Now, my dividend income will pick up much faster towards the later half of the year, especially since my big positions VOO and SCHD pay quarterly dividends. Now, in terms of my annual dividend payments and where they're coming from, we can see here that VOO narrowly beats out SCHD to be my highest dividend payer across my portfolio, and then we have Altria Group, followed by Texas Instruments and Booz Allen Hamilton. So now that we've seen my top level portfolio metrics, let's go over to my future value calculator and plug those values in to see where my portfolio value might be in the next 40 years. If you guys do want to try out this future value calculator for yourself and haven't yet done so, check out the link I'll leave in the pinned comments. It's to my Patreon. You guys can follow me on Patreon for free and download this future value calculator to try it for yourself. So my starting principal is the current value of the portfolio, which is $53,520, and my annual contribution is how much I'm expecting to be putting into the portfolio each year. In my case, that's $12,000. Now for annual dividend yield, it just pulls it from my first page at 1.56%, and then expected dividend increase and expected price appreciation can be changed to whatever values we want. Now, depending on your strategy, you might have to go lower, for example, a 4% price appreciation, maybe a higher dividend increase at 10%, or you might have to do the opposite, of course. Now, in my case, I would say that my dividend increase expectation could be lower, maybe like the market, so be around 4% per year, and then the expected price appreciation might be a little bit higher at closer to 10%. Now, in that case, after 10 years, my portfolio value should be about $311,000. Now, to make it a little bit more interesting, let's jump into the 20-year time frame, and you can see right here that it should be worth about $1 million at 20 years and be paying about $5,300 of dividend income each year. By that point, I would have earned $60,000, which would have been reinvested back into the portfolio. Now, if you do have a longer time frame, I'll quickly show you both the 30 and 40-year marks. So for 30 years, it's $3 million for expected portfolio value, and at 40 years, it'll be about $8 million, which is amazing. Now, of course, this calculator does take a lot of assumptions into consideration, but it's still a nice guide in order to see if I'm on pace for my goals. So without wasting any more time, you can see here my order history section of my spreadsheet, and in this case, we're looking at my dividend history specifically. So I order each dividend that I get by the date and the company that paid it out, and you can see right here that Lowe's was the first one to pay me out. They paid me $2.37, and I reinvested that to get 0.009 shares of Lowe's. Now, they actually had a pretty decent earnings report, both them and Home Depot, so I'm considering whether or not I want to keep them on the portfolio or cut them going forward. Next, we have General Dynamics on the 7th of February. That paid me $2.93, and that was invested to get back 0.011 shares of General Dynamics. Now, I do like the company and have faith in them long term, but right now I've been investing a lot into Booz Allen Hamilton. I think they have a better opportunity to outperform General Dynamics in the long run. Because of that, I have been considering cutting the position because I don't want too heavy of a concentration into the defense sector. Now that same day, MasterCard paid me out 77 cents, and with MasterCard, I've really been considering not reinvesting these dividends back into the stock because it only gets me 0.001 shares. That's the smallest amount that it can reinvest into, and because of that, I'm basically buying it at a price of $770 per share, and if you look up the price of MasterCard, it is much below that. Just to show you guys what I mean, MasterCard is currently trading at $576, so by reinvesting my dividends, I'm basically getting ripped off on this reinvestment. So next we have Texas Instruments, and I do have a pretty sizable position in the company, and they also have a pretty nice dividend. So because of that, I got paid out $19.74, which was reinvested to get back 0.11 shares of Texas Instruments, which I'm very happy about. Finally, on the 13th of February, I got paid out by Apple $2.27, buying me back 0.01 shares at $227. That's because my Apple position is very small, and the dividend yield for Apple is also very low. So taking a look at my holdings real quick, I have organized them from my highest total return to my lowest total return. So I'm going to move here to the right so you guys can see exactly what I mean. Now MasterCard comes in at number 1 at 83.32% total return, and honestly, I just wish I bought more of this company. I had a very strong conviction in it, but at the time, I was only starting to dabble in buying individual stocks, so I went very light and bought only one share. Now, of course, it's easy to say what I would have done. I would have loved to have bought more Visa and MasterCard, but unfortunately I didn't, and that's totally okay. Apple comes in next at 78.4% return. Texas Instruments comes in at 33%, which honestly has been a pretty good performer for me so far. It was dipping down pretty significantly just a couple weeks ago, but it's rebounded pretty nicely since. Now, my problem with Texas Instruments is I do feel they're pretty overvalued at the moment. They are a cyclical company and their earnings have been very low for quite some time. Now, if they can start increasing those earnings per share very quickly again, then I'll be pretty happy with this, but otherwise they might have a pretty strong correction to their stock price going forward. Now, this is one of my newer positions in my portfolio, so its return for the amount of time that I've been holding it for has been really good. Next, we have Lowe's at 32.65%, and this has been all over the place. It was sitting much higher than this a little while ago, but since then it has dropped pretty significantly in stock price. I've been considering at least consolidating my Lowe's and Home Depot positions into one or the other, or potentially selling out of both positions. For now, I haven't yet decided what I'm going to do, but if you guys do have any inputs on Lowe's and or Home Depot, just let me know down in the comments below. I would really appreciate it. Last, we have General Dynamics at 24.78% total return, and it was sitting much higher than this, but when the defense correction happened earlier in the year, or I should say late 2024, it was hit pretty hard. Now, as I mentioned before, I am looking to potentially cut this position going forward, but I haven't yet done so, and that's because I don't want to have too heavy of a concentration in the defense sector, especially since I prefer to bet on Booz Allen Hamilton than General Dynamics. If you guys do like the transparency and are enjoying the video so far, consider leaving a like on the video. Now in this column, you can see how much I've earned in dividends so far, and Texas Instruments has paid me the most. That's because they're the largest position, with the current allocation being about 5.4% of my portfolio value. Hopping into my dividend calendar, you guys can see right here each of my companies that I currently own in the portfolio and how much they've paid me in dividend income this year so far. So as you can see right here in January, I only got paid one dividend at $25.14 from Altria Group, but this month we're looking at February. So we already talked about the dividends, but what's nice about this is that I can see how much each company paid me each month, and I can also see how much they paid me across the entire year. So as the year goes on, this is going to fill up nicely and you're going to get a better idea of what I'm talking about. So far in the bottom right corner, you can see that the total is at $53.22 for the year. Now the monthly breakdown section does a very similar job as the dividend calendar, but it has a little bit of differences, and that's because it's an older sheet in my spreadsheet. So what I like about this is it also divides the amount invested. So I invested $1,700 in January, I invested $3,280 in February, and these are my dividends for each month. Now I will admit February is a little bit heavier of a month than I was expecting, so potentially March will be a little bit lower than that just to balance it out. Now in terms of companies I'm looking at for the coming month, I'm thinking about PayPal. It's getting pretty attractive right now, and I bought some this past month, but the prices continue going down. Booz Allen Hamilton, because of course it keeps dipping, and Google. Now Google has been pretty tempting lately. I bought it when it dipped down to 165 a couple months ago, and if it starts approaching those values again, which it is at around $169 per share currently, then I might start purchasing more shares once again. Now the reason I've been a little bit hesitant on Google is not because I don't have faith in the company. I do, and I want to build a larger position in it, but I think there's further downside ahead. It has already been a pretty rocky start to the year, and I can't imagine it gets any better going into March. Now, if other companies start dipping pretty significantly in stock price like Uber, Microsoft, Amazon, I'll definitely be picking up some of those shares as well, and I'll make videos on all of that. As always, that does bring us to the end of today's video. I really hope you guys enjoyed taking a look at my portfolio and seeing which companies paid me a dividend in the month of February. If you did make it this far into the video, leave a comment down below letting me know how much you received in dividends this month. I'd love to know. If you haven't yet watched last week's video where I talk about what stocks I've been recently purchasing, check out this video right here. And if you want to see the video before that where I did a stock analysis on Canadian National Railway, check out this video right here. Remember, the best time to invest was 10 years ago. The second best time is today. I want to thank every single one of you guys for watching, and I will see you in the next one.